Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden money secrets of companies. And boy, do we have a juicy one today, like a secret handshake between a company and some big lenders for a cool $32 million. So what's going on here is that Unitil Corporation is filing a current report on Form 8K. Think of this as a company quickly telling the public about a really important event. The most important date here is July 8, 2025. This is when the main event we're talking about happened. The company we're looking at is Unitil Corporation. They're involved in the energy business, specifically natural gas. They're incorporated in New Hampshire. They've got common stock trading on the New York Stock Exchange under the ticker UTL. Now, the most crucial part of this filing is about a big deal Unitil's subsidiary, Bangor Natural Gas Company, made. This is what the whole report is really about. Bangor Natural Gas Company, which is part of Unitil, entered into what's called a note purchase agreement. They got money from two specific lenders, CoBank, ACB, and Unitil of Omaha Life Insurance Company. So what exactly did Bangor do? They sold two major batches of notes. The first batch is $14 million worth of notes that are going to mature in July 2030. They carry a 5.70% interest rate. The second batch is $18 million worth of notes maturing in July 25 with a higher interest rate of 6.31%. So in total, Bangor raised $32 million. This is significant long-term borrowing. These agreements, the note purchase agreement and the actual notes themselves, have all the typical stuff you'd expect. They lay out promises the company makes, representations and warranties, and rules they have to follow, covenants. There are also clauses about what happens if things go wrong, events of default. Why did they take on this debt? Well, Bangor plans to use the money mainly to pay off other debts the company already has. This is a refinancing move. They'll also use some of it for general company needs. Refinancing debt can be a smart move if they can get better terms or lower interest rates than their old loans. This wasn't a public offering where anyone could buy these notes. They sold them to big institutional investors like investment funds or insurance companies, and they did it using a specific exemption in securities law. This means they didn't have to go through the full registration process with the government for these sales, and they make it clear these notes aren't registered with the government. So unless there's another legal exemption, they can't just be bought or sold by anyone in the US. They're for a specific group of sophisticated investors. This part of the filing, item 2.03, basically says that because of the deal in item 1.01, Unitil has created a new financial commitment. It's a direct financial obligation. They're just saying that everything we just talked about in the previous section about the notes is also relevant here. It's all connected. This section is about the supporting documents. Here they list the actual agreement for purchasing the notes, and the specific note for the 5.70% series that went to CoBank, and the specific note for the 6.31% series that went to Unitil of Omaha Life Insurance Company. And finally, there's an interactive data file about the cover page, which is useful for computer systems to read automatically. And the whole thing is signed off by Daniel J. Herstak, who's Unitil's Senior Vice President, Chief Financial Officer, and Treasurer, on July 14, 2025. This is about a week after the deal actually happened, which is pretty standard. Now, let's put on our investor hats and think about what this means for Unitil. They're borrowing a substantial amount of money, $32 million, to pay off existing debt. This usually signals they believe they can get better terms on this new debt, potentially lowering their overall interest expenses. The interest rate's 5.70% and 6.31% for the longer term notes. Think about it this way. If you owe someone money and you can get a new loan with a lower interest rate, you do it. It saves you money over time. Unitil is doing the same thing with its subsidiary. By refinancing, they're streamlining their debt structure and potentially improving their cash flow by reducing interest payments. However, the fact that they're issuing unsecured notes means these lenders aren't getting specific assets as collateral. This makes them riskier for the lenders, which is why the interest rates are what they are. Unitil is essentially promising to pay them back based on the company's overall creditworthiness. The fact that they're selling these to institutional investors and not the general public is also noteworthy. It suggests that these are sophisticated investors who have done their due diligence. It also means Unitil isn't raising capital through selling more stock to the public right now, which could dilute ownership for existing shareholders. Looking at Unitil's overall picture, remember they're a utility company. These companies often have stable revenues because people always need gas and electricity, but they also have a lot of fixed assets like pipelines and power lines which require ongoing investment and often significant debt to finance. So seeing them take on debt to manage their obligations is not unusual for this industry. The key question for investors is whether this refinancing truly improves Unitil's financial health. By reducing interest expenses, they can have more money available for operations, expansion, or returning value to shareholders. However, they are still taking on new long-term debt obligations, and they must be confident in their ability to generate enough cash flow to service these debts for many years to come. The longer maturity of the 2035 notes means Unitil will be managing this debt for over a decade. If interest rates were to fall significantly in the future, they might wish they had waited to refinance, but that's always a gamble. Overall, this filing shows Unitil is actively managing its debt. It's a sign of financial housekeeping. They are addressing their debt obligations in a way they believe is beneficial to the company. While there's nothing overly alarming here, it's important for investors to keep an eye on their overall debt levels and their ability to meet these new commitments, especially given the longer tenors of these notes. Alright, that's our breakdown of Unitil's latest financial maneuver. What's your take on this debt deal and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.